and welcome. It's John Cato, 30-minute trading and FX Profit Lab. Just want to talk to you a little bit about a Dow Jones trade made today on the 30th of March 2015. I actually got in and made this trade. This is a demo account, as you can see. In this demo account I have 10,000 units of currency. The reason I do that is because if you have 1,000 units in your account, you can divide the lot sizes by 10 and it comes out right for you. You can also calculate very easily off of this what lot size would work for you. In my case, I like to trade with at least 10,000 in my trading account, and 10,000 is therefore a very good and simple number for me to use. Let's have a look at this particular trade on the Dow. On the 30th of March, we got the first trade alert here on this candle. You can see that the S trader alert kicked up, that's long, bull trade. M trade alert kicked up, long, that's bull trade. The M trader 3 was still down, giving you some caution because it was pushing down. However, it had been down for a long time, was potentially on the verge of change. These indicators here always kick over early. This is the first pulse of bullishness, and it is alerted by this particular indicator. So let's have a look at that litmus test, which tells you whether or not the trend is bullish or bearish. On a short-term trend, is telling us it's just moved up from below the line to above the line. That's now bull. And you can look at the bull bear butterfly trade here. That value there is reading 9 at this stage here. You can see on the left hand side in the data window, that's in this figure here, bull bear butterfly. It's reading 9. That is bullish. That makes it a very good trade. Everything is set up except for M trader 3, which we're hoping would make the trade. Let's see what the trade alert said at that particular time. Let's just move down to the figure that we're looking for. So here we have it. We got the Dow, the US 30-minute candle, S trader buy, 5.3 lots, mini lots there. That's 0.53 lots. Entry price 17781. Stop price 177.65. T1 17804, T2 17820, T3 17835, 17854 is T4, 17870 is T5, so that's what we're looking at. The spread at this time was 3.4, the trading range is 22, the inherent risk reward is 6, we're looking for a target of over 4 on that. The reward to risk ratio is 2.3, we're looking for a target of over 1.3 or 1.4 on that. That makes it a very good trade. We're looking at a target of 17870 if we're hitting T5. That's our big target. Let's see what that comes out. We'll take this across here, move it out the way. We can see we got in the trade there 17835, 17847. Let's just move it back in again. 17847 on that particular trade. That means we cleared T3. We hadn't quite made T4. Okay, so that's a trade I actually did take. I banked it at T2, putting all my money away at T2. A little bit early, as you can see, because in fact we went beyond that. We went up to 3.8, which is there, and I banked it somewhere in this order here. Right, next thing we want to look at here on this is that we actually got trade alerts then. Having pulled back, we got some more trade alerts there. 12:30 candle, that means the 1 o'clock alert. We're looking for a 1 o'clock alert, which would have been activated at the end of this candle here, entry here, and we had the potential for making that trade of 138 pips. Let's have a look at the alert and see what the alert tells us about exactly how we should make that trade. So here we have an alert, the Dow 30-minute candle, S trader, it's a buy. It's 0.86 minis, or sorry, 0.86 lots or 8.6 minis. Entry price 17827.7, so we might want to enter at 17828. Stop price 17817.23, so our stop might be 178.17. These are suggested entries, suggested stops. T1 17836, T2 that's target 2 17843, T3 17851, T4 17860, T5 17868. Trading range is 3.4, sorry, spread is 3.4, trading range is 15. Inherent risk reward is 4.4, that's good enough but not as strong as the last time we had a look at the last trade. And here we have reward to risk ratio 1.5, so that's all good enough though, it's all fine for taking the trade. Let's see what happened. We're looking for a target beyond 17868 and we'll look and see where that goes. So here you can see we got the entry candle there and our target, top target is 17868. 17868, so we hit that easily. 17868 for the first target there. Now if you're running multiple tranches, you'd have your last tranche running all the way up here, 143 pips. You might cover out when it comes down and pulls back here, so you might actually only end up with 124 pips. 124 pips, remember the actual entry suggested lot size was 0.86 lots or 8.6 minis, so 8 minis at 124 is nearly $1,000 or £1,000 on that trade had you taken it all the way. You may have taken money off on the way up, various places on the way on the trade up. That's a trading decision that you might want to make. It's entirely up to you how you make it and what choices you make. However, it is clear you could have made 124 pips and the suggested lot size on that particular trade that would maximize your reward and minimize your risk. No more than 0.9% of your trading account would mean that you'd actually end up with an excellent reward of $1,000 off of a risk of $100. This is John Cato, Trading and FX Profit Lab. Successful trading.